Hello there, good day, good day, good day. Okay, this is Francis here from Generational Wealth Traders. I just want to quickly, show you or explain how to best take trades on, trades using the Precision Trader. Even as you can see here, I already have mine installed. I trust you have installed yours. It works only on MT4, on the MT4 on your desktop, not on your mobile phone, only on your MT4 on the desktop. So the white balls here and the blue balls, when you see them on my chart, basically that is, the Precision Trader. Now, let me just quickly show you this. If you click anywhere on the chart, right click and go to indicators list, you will see the various indicators I have there. You can see that is the pip counter, that is the market price, as you can see here, market price, pip counter, and you can see the watermark there. That's the correct, that's the currency pair in the background is the watermark that you can see there. But what we want is the Precision Trader. So let's double click on that. And it brings up the Precision Trader, for us. I have obviously chosen to have it as blue and silver. I mean, the silver looks white, but, whatever you choose. But try and stick to this color so that when I'm looking at your chart and you're looking at mine, we know we're on the same page. If we go to input, you can see here, it's Paul. Now, the Precision Trader indicator has 3 different strategies, but the one I am teaching now is for Paul, how you want Paul to give you the signal. In the sense, Paul is the one giving you the alert here. The other options you have are signals from Silas or signals from the general. Paul is probably the easiest one, so I'm, going with that, here. And that is basically what I'm offering if you are getting this for free. For obviously the subscription members, get to know the other strategies. Okay, so we're going with Paul, and we want to use the filter called Wonder, the Wonder filter. That's why I have chosen True here. True basically means yes, I want to use the Wonder filter. You also want to have the sound on, so that if your computer is in one room and you are in a different room and the alert is given, you will hear a sound. There'll be an audible alert. An audio alert. So you want to leave that as true as well. Now, as for the email, I would say to forget about that really. After all, you can only really trade this when you are by your computer or in the house or in the office, wherever you are trading it. Okay, so that's basically what you want it to be. You want to tick that as well. I mean, it doesn't really matter, but just tick it. So let's click on OK. Once you amend, you make any adjustment or amendment, you want to go back there to the template and save it again if you have it saved, so that if you are trading this on any number of currency pairs, you would have to have the Precision Trader on them. You have to install the Precision Trader. So this is the Euro New Zealand 15-minute time frame. So if I wanted to trade it on gold, trade it on pound JPY and 3 other pairs, you have to have it on each of those pairs, and each of those pairs have to be open. So, what you don't want to do is to have Euro New Zealand dollar open twice, maybe say on the 15-minute and again on the 5-minute. It will give you alerts for those 2 time frames, and you don't want that confusion really. So just stick to 1 time frame and trade that. So you can trade the Precision Trader on any time frame, on any currency pair or any asset. You just have to get used to it. If you're going to be trading on a lower time frame, like the 5 minutes here, you want to basically master it first, because the bigger or the higher the time frame, the more reliable and consistent the setup will be, and your profits obviously. So I would say to start with the 15-minute time frame. Hence, I'm starting with that even for this lesson. Oh, okay, so let's go. So we have the precision trader installed. What else do you need to know? Yep, that's it for now. Let's just quickly go here. So you can see here, I have said the filters you need to trade this. Somebody did ask the other day, because I told him about the 200 SMA. He says, is there any other filter? Well, the trend line is what you need as well. We're going to be going through that. You can see here, long trades. That's if you are buying, you want it to be that the alert or the price is above the 200 SMA, and it's also above the upward pointing trend line. We're going to go see that soon. If you are selling, if you're taking a short position, only sell when the price is below the 200 SMA, or, well, not or, when it's below the 200 SMA and below this. So you are selling, it has to be below these two, filters. If you're buying, it has to be above them. So let's go back. So you can see I already have that there. What I now need to add is my trend line as a filter. Even if I don't add the trend line, I know if I see the buy here, yes, I can buy because the price is above. This blue ball is for a sell. I wouldn't be selling because, yes, I would have won this trade, but, it then went against me. You don't really want to take that risk. Just go with the trend with this indicator. So what I'm going to do now is to draw a trend line. I trust you know how to draw a trend line. If you don't, that will be for a different day, another lesson. So here, you can see I've drawn this trend line on one time frame, and I could take the trade on this time frame or go to a lower time frame. So what we'll do, let's bring up the 1 hour time frame, and we're going to draw our trend line on the 1 hour and take the trade either on that time frame or go to a lower. It will be preferable to take your trades, on a lower time frame. You will get better entries. You've done your analysis on this, and you've ascertained that the price is going up, is trending up, and like it is, as we see it, you draw a trend line. Obviously the market has since moved, but let's say by the time you drew your trend line, it was here. But even then, as it is now, it still works. It's still fine. It's still fine. Okay, so we've basically just drawn a trend line here. So, we now have two filters, if you like. We now have two filters. We have the moving average and we have the trend line. So here we get an alert. You can enter at the close of that candle. Always wait for the candle to close, guys. The candle has to close. Most of my strategies, require me to wait for the candle to close, no matter the time frame. I rarely enter trades on impulse. Impulse entries are when you basically enter before the candle closes. But most of the time the candle has to close. So this one, the candle closed. If you entered, you can see it was a good win. This is the 1 hour time frame. We're going to be going to a lower time frame as well to see how the trend line still holds. Coming back to the alert anyway, you see before the candle closes, the alert could be the ball, the precision trader ball, I'll call it PT, precision trader. PT ball could be flashing, as in going off and on, just before the candle close. But once the candle closes, it does not go off and on, it stays there, it prints, and stays there permanently. Even if it were to come 2-3 days time, 3 years time, it would be where it was when it first printed. So here, you would have entered that trade, and use a previous swing low as the stop loss. Here you are buying, obviously the stop loss is going to be below. You don't want to be using a previous swing low, which is far away. The risk to reward has to be good. This would be ridiculous. This is 160 pips. I'm sure we got 160 pips here, but that's not the whole idea. The risk to reward is 1-to-1. The risk to reward I'll put that again, I'll say that more clearly. You know, the risk to reward is a minimum of 1-to-1. Yes, often it gives you a lot more, but the minimum is 1-to-1. And by that I mean, if your stop loss is below the previous swing, let's say your stop loss is here, you know, some distance away from, you know, the swing low. This is where you entered, that's the swing low. Obviously, we know that's the swing low. We're talking of support and resistance or structure here. You know, let's say you placed your stop loss there. From here, where you entered to the stop loss is about 99 pips. Yes, it's huge. After all, this is the 1 hour time frame on Euro New Zealand. Euro New Zealand dollar is one of those pairs that has a high ADR. High ADR meaning average daily range. You know, that's the number of pips by which it moves in a day. Every pair has an average number of pips they cover in a day. Obviously, you will need to know that, perhaps some more when I have a live session with you. But anyway, you enter here, the stop loss is about 90, let's just say 100 pips. You want to be targeting at least 100 pips as TP1. So which means you will close the trade somewhere around here when it hits TP1. Obviously, you can see with this trade, it went on and gave you a lot more pips. It gave you more than TP1. Let's just do this. This is yellow dotted line. You know by now, when I have my yellow dotted line on my chart, it means that's where I entered the trade. Now this is meant to be red. That's the stop loss. Okay, so here, you can see we entered here. Stop loss here, it didn't even come there. It basically just went, it took off. That's the beautiful thing about precision trader, you know, little or no drawdown. It basically just took off. And guess what, guys? Guess what? You know, it went up there. It gave you more than your 100 pips, which you were having as TP1 anyway. You know, I mean, for those who are my members, you know, my mentees, the VIP members, you know when not to come out of trades. I mean, you know, if you're not a member, you might not know when not to come out of when not to come out of trades, because a lot of traders just jump out when they get some pips, you know, when the market was willing to give them a lot more. So you got in here, it gave you as much as 150 pips, but then it pulled back. If you stayed in the trade, guess what? If you stayed in the trade, it then obviously gave you even more. Or if you like, when it pulled back, when, you know, it was beginning to take off again, if you're my student, you would know when to get in the second time, you know, you would have gotten a lot more pips. If you just stayed in the trade anyhow, if you didn't come out of the trade, whether it was going to pull back or not, it would have kept on pulling back and just giving more pips. But hey, guys, you know what I say. Whenever you've analyzed your charts, especially if you use the strategies I teach you, know you can go in with at least 2 trades or 2 positions. So that in this case, by the time it hits TP1, it closes and let it go let the rest of the trade continue as TP2. You know, so that is basically one of the best ways to trade. You know, like I always say, profitable traders do not enter one position. They always think of a way or find a way to enter more positions once they are in the trade. As long as the price is going in your direction, you want to take more positions. Whoa, I wish I could teach all that in this in this short video. It's going to be a short video. So anyway, 1, you want to only take buy trades or long positions, long trades, if the price is above the moving average and above the 200 SMA. Let's keep going. Oh, well, okay, that was the end. That's where the price is. So as it is now, we can still buy. We can still buy, except that you will have to wait for a new alert to come on first. Because if a new alert does not come on and you buy now, the price might continue. You know, the indicator has been designed in such a way that it gives you a sense of what you want to be doing. Okay, so this is an example of a long trade. Let's see if we can find a sell trade. Okay, let's just do this. Let's extend this. Let's say we had seen the chart here. We had seen the chart when the price was here. You know, the price is above the moving average. It's also above the trend line. You want to be buying only. So we had an alert for a sell here. Guess what? If you had sold, you would have gotten a number of pips. Oh yeah, absolutely. But that's not what you want to be doing. You know, you are better off going with the trend unless you know how to trade otherwise. If you know how to take counter trend trades, then you can take some position. But for now, especially if you're using the precision trader for the first, you're just starting off with the precision trader, you want to focus on taking only going with the trend really. So you would have ignored that. You would have ignored that. You know, something else to note, guys, something else to note, you know, when taking trades, let it be that, you know, you focus on alerts or trades where you have when the price is still close to the EMA. I mean, okay, fine, it's a bit far there, but nevertheless, it still gave us, you know, the number of pace, you know, that anybody would desire. However, you know, what would be even better is when the price or the alert is still close to the trend line and the moving average. You know, so take the trades or rather, let's put it differently, have a preference of trades close to the moving average and the trend line as opposed to the ones that are far. You can see here, for instance, this was the alert given, the price was there, you would have entered and, you know, it would have given you a lot. But if an alert was given here, guess what happened? It only just, well, it barely moved up and came down. You know, the only good thing is you would have had your stop loss. Well, okay, if you had your stop loss here, if you entered here for a buy and you had your stop loss below this swing, just some pips below, you could have gotten away with this. I mean, obviously, you would soon know with time how far away to place your stop loss. You don't want to place your stop loss bang on the structure or support. You want to have some pips away. Now, on the 1 hour time frame, I would usually have it 30, you know, like 15, 20 pips away from the swing low. In the case of a buy trade, if it was the other way around, it would be above. So here, that's the structure. 15 pips away would have been here, 20 pips away like here. So you would have had it there. So you would have just about gotten away if you entered this trade. It just came there, didn't quite hit stop loss and continued. So a couple of things there. Try and take your trades as close to the trend line and as close to the moving average as possible. And, you know, if you are buying, let it be that you do not place your stop loss bang on structure or support. Move it away like, you know, 15, 20 pips below, and you should be fine. I mean, if it so happens that you lose the trade, well, it's one of those trades. We don't win every trade. Whether you are trading price action or using indicators, we do not win. Even robots do not win every trade. Okay, so that's that. You know, obviously, we notice that we don't sell. That would be a counter trend trade. The trend line tells us the trend is to the upside. The moving average tells us the same. Why would you want to trade in the opposite direction? Okay, let's look for a sell opportunity, and we would call it a day. Okay, so you can see here the price is trending up. Even though it's pulling back, it's trending up. Let's do this. Let's do this. Let's do this. Let's pull out our tools here. Now, even though the price is doing a zigzag going up, it's going up nevertheless. It's going up nevertheless. So that's a good thing. But there are times when the market will be consolidating, like here. Like here, you can see it's not exactly going up. It's just going up, down, up. It's just oscillating. It's frustrating, isn't it? That's the kind of trade that frustrates traders. Up, down, up, down. You don't want to be taking trades there. You can notice as well, or you would notice as well that when it's oscillating, you'll be getting both buy and sell signals. Buy signal, sell, sell, sell. You know, I mean, what kind of thing is that? You don't want to be taking such trades. So when there's consolidation going on, as we have here, just do not trade. Do not trade. Look for a pair that is trending. That's the beautiful thing, guys, because you know the indicator works on all pairs and all assets and all time frames. If you cannot find a setup on one currency pair, guess what? Move to the next. Don't say, oh, I must trade Euro, New Zealand dollar, I must trade pound JPY. Move to a pair that has a good setup. You know, that is basically what I advise you do. You know, if you are going to be on a higher time frame like the 1 hour, especially on such a pair as this that has a high ADR, note that you are going to have a wider stop loss, as opposed to if you were on a smaller time frame, you only need so much. You know, you need fewer, a narrower or tighter stop loss. So yes, I suppose with this one, even with the consolidation here, you still would have been able to draw your trend line. You still will have been able to draw your trend line, at least connecting these two here, this swing low to this swing low. You know, but anyway, if you're going to connect two swing lows, this consolidation would have passed anyway. You know, so you would have missed out this consolidation. But just in case, you know, you were connecting two swing lows with a trend line, and you find consolidation, then you don't want to be trading it, really. You know, you don't want to be trading it. I mean, for instance, you see there's a trend line here connecting these two lows, but the price came and broke below the moving average and broke below the trend line. You should now be looking for sell positions. But guess what? PT did not give you any alert, so that's fine. Just wait for the next alert, which happens to be a buy, and you take it up. Let's look for a quick sell position, and we would round up. You know, obviously we are back testing now. Okay, now we see the price is moving down, even without using the trend line or having the indicate the moving average. You can tell, you know, it's visual anyway. You can tell the price is just going down. But nevertheless, if you have to use the filter, fine as well. So let's just use the filter here. Connecting the highs. The price is below the moving average and below the trend line. And here, an alert is given. A buy alert is given. So obviously, you are going to ignore that because you don't want to be buying when the price is below. So here, what do? Let's just use this as a marker and make this bigger. So here, you enter the trade. Okay, that's not. Let's make it yellow broken lines, as we know that is the entry. So here, when you get the alert, the close of the candle, you enter for a sell. You enter for a sell. Notice that the previous swing high is just not far from your entry. So that's not good enough. You know, you want to basically have it reasonably, you know, away from the swing high. If you have placed it bang on the swing high, guess what? You entered, it gave you 50-something pips, but what happens on some occasions is that you might not get that much. It pulled back and it would have hit your stop loss. You don't want that. So what you do want is to consider a stop loss that's reasonably away from the entry. You can use this. That would have been a good stop loss, except that it's a lot of pips away. That's over 100 pips. But the fact that you know it's most likely going to give you 100 pips as well, you could perhaps use that. But if you don't want to use that, that's a swing high. Another swing high is here, really. It might not be easy to spot, but it is there. So you don't want to place your stop loss bang on either, because you can see if it pulled back, it almost took you out. Let's use a different color, guys, this time, because the moving average is red and this whole area is let's use what color do we use now? Let's use dark blue. Let's use dark blue. Okay, so if you had placed it bang on here, this way you entered, this almost took you out. And depending on the spread of your broker, it most likely could hit, so you don't want that. So just, place it, some distance away, like I said, maybe just 15, 20 pips away. Oh, bang on, almost bang on. So when you enter the trade, it came down. Even if it went back up, it didn't get to your stop loss. It just went down. Then the next signal was a buy. You ignore that. Get behind me. Get behind me, Satan. And basically you wait for the next one and you enter here at the close of that candle. That's at the close of that candle. That's like a swing high, but it's too close to your entry. Then you could use this one. You could then use that one. Some pips away, it did not even go close. A lot of the time, when the signal is given, you are almost good to go. And this would have been brilliant. If you entered here, from here to here, your stop loss, mind you, I said is 1-to-1. Your stop loss is like 100 pips away, even if you thought that was too much. Now, if you don't want to use a big stop loss, guys, then go to a lower time frame. That's just the solution. Some people's accounts are small. It can't handle a 100 pip stop loss, because if it goes and hits a stop loss, that's a chunk of your capital taking. So use a smaller time frame like the 15-minute time frame or the 30-minute time frame. Once you get used to trading with it, you can even use the 5. So, but I'm assuming, this is the case of somebody who has a reasonable sized account. And if you enter here, 100 pip stop loss or thereabout, it's going to be 1-to-1 minimum. Risking 100 pips to get TP1 of 100 pips. And boom, you got it somewhere here. My goodness, I feel like saying hallelujah. So that would have been a good one. Obviously, you can go for TP2, TP3 and all that. Again, for those who are my members, who are my mentees, that basically are under my mentorship, you know how to stay longer in a trade. You would have had no business coming out of this trade. Milk the market as much as you can. You've gotten your TP1 at 100, it gave you a lot more. Let's just see. Let's see. Assuming you got there, it gave you 300 pips before it even pulled back. There were some minor pullbacks there, but this was a deeper pullback. But guess what? You can ignore the minor pullbacks and, be concerned about the deeper pullback. But before then, it gave you 300 pips. If it was beginning to pull back like that, oh yeah, you would have come out. But you would have come out with 200 pips. But anyway, I could teach you a lot more, but let's leave it so it doesn't become too much and overwhelming. So that's it, guys. I hope, this has not been too long. If you have to watch it again and again, do so. But one thing you must remember is be mindful of this. The filters you need are SMA trend line. Only buy when it's above and only sell when it's above these filters. So have a profitable trading experience using the Precision Trader. Bye now.